Trideep Bhattacharya is with us, Chief Investment Officer, Equities at Edelweiss Asset Management Company. Trideep, good to have you with us here. Thank you very much for your time. First, since our last chat, Trideep, if you can update us, what have you been doing in the fund? What have you added? Where have you trimmed positions, if any, and the actions you've taken?
Yeah, I think, first of all, thanks for having me on your show. I think overall, what we are focused on right now, particularly as we head towards the next result season, is to identify those areas where we think earnings are likely to be relatively or in absolute terms resilient versus others over the next year or so. And I think one of the areas that we have added in the weakness that we have seen to a certain extent in the correction last month has been in the power side of things, where while a couple of weak data points kind of led to some correction in power related stocks, we've sort of added to our exposure there overall, because I think overall structurally over the next 2 to 3 years we think that the supply is growing far slower than what the demand is. And given that we are moving towards industrial sort of a recovery, we think that that's one area where companies exposed to the power supply chain could add, could see some robust earnings and whatnot. Apart from that, couple of stock-specific weakness is what we capitalized on. So net to summarize, we've been sort of with a bit of a firepower. We've been waiting for the correction that we have seen so far and added to areas like power, some selective elements of tech, and I would say that in capital goods where we saw some correction come through, we've added to them.
Okay. What else are you scouting for? You said you still have a war chest with you or some firepower. Are there any other spaces that you're analyzing?
So I think overall we are interestingly looking at IT as a pack. We don't expect anything great shakes coming out of the result season. But I think if you look at the commentary made by the industry leader which reported recently, he said FY25 to be better than FY24 and the deal wins are improving. Again, towards the back half of next fiscal year, we think there is a reasonable chance that we see some sort of recovery come through. And that's something that we are keeping certainly on our radar screen. Any weakness that we see on that, we sort of add on to it. We moved from underweight to neutral about a quarter back, and hence, directionally speaking, we are looking at it, looking at the sector a little more constructively, not in a hurry, but maybe over the next couple of quarters. That's one that we are thinking positively. Second, overall, I think we are a little more selective within banks and financials, particularly within NBFCs. Some of the stocks have seen meaningful correction on the back of RBI focus on funding, liquidity, and growth. And as the weakness comes through, we are capitalizing on them to sort of, particularly towards the AAA rated NBFCs, any opportunities, we are sort of sizing them up in our portfolios where we might have missed earlier. So it's mostly kind of trying to cover up for in any area that we have left rather than any really fresh purchases that we have done over the last month or so.
Okay, all right. Hi, Trideep. Good afternoon. Good to see you in. So a little bit, turning a little bit constructive on parts of IT and on banks and financials. You're looking at some of those better rated NBFCs. Some of those NBFCs have gold exposure. Since gold is moving up, I just thought, we'll try to zero that down.
Well, can't get more specific than that. You very well know the stocks that they are. But I think the framework that I use in here is as funding gets tough, as the regulator gets tough on the quality of growth, the companies, the NBFCs which have better funding exposure and which are better rated will have better source of or access to capital. And that will drive the alpha, in my opinion, over the next 12 months as quality of growth becomes important assessment, going forward.
Okay, all right. What about, since we're talking about banks and financials, you give us your view on NBFCs. What about between private and public sector banks? Public sector banks obviously did very, very well. Now there are signs, HDFC Bank's quarterly update was quite good. Some on the street believe that maybe the worst is in the price for that bank. What is the preference between the two?
Yeah, so I think overall we have been overweight public sector banks for the last year or so. and we have sort of reaped some of the benefits overall. So we have in pockets actually taken some money away from public sector banks. We might be a little ahead of the curve over there, and we are putting in those banks where we think particularly some of the sector leaders where we think that it has kind of seen meaningful amount of correction and weakness, fundamentally speaking, over the last couple of years, driven by management transition. And maybe over the next 2 or 3 quarters, things may actually turn around. We are not in a hurry again. I don't think the needle is moving in the next quarter or two, but I think when it moves, it will move quite quickly because the market positioning is quite adverse or on the short side. So a little bit of improvement could create a meaningful amount of movement there. So we are mindful of that and hence gradually shifting capital into those areas which have underperformed over the last couple of years.
Are you looking at metals constructively?
Yeah, so metals is another area I probably forgot to mention that we have added tactically, not structurally, over the last month or so, particularly as a subset of the power theme where we think, overall meaningful amount of mines, etc., come online. And some of the stocks had their QIBs overall as well. So metals is something that we've increased our exposure to, but we haven't gone overweight. At best, we've covered our underweight. We are mostly neutral. We think the recent buoyancy that we are seeing in China is more transient rather than kind of structural. But we have covered our underweight and we are kind of well positioned with regards to any near-term rally that we might see or what we have seen, even though we don't remain, we are not fully convinced of the medium-term outlook about the metal sector.
Pull up VICHVAG, that one is up 16%. That's a market leader in desalination plants in India. And we had the management with us a couple of days back. I mean, this is, I think, towards the end of last week. The company had gotten into a fair bit of trouble about 10 years ago, 8 to 10 years back, with regards to receivables, etc., from local municipalities they were working with, state governments and such. But they've come back in a strong way. The company told us they've got about 12,000 crores in orders. Pipeline is strong. I mean, the technology they're betting on is doing very well for treatment of water. And of course, I mean, with manufacturing sort of picking up in a big way, these plants are required across the country. So they're working with many large industrial groups, etc. as well. So that is VICHVAG. Any thoughts? I know, Trideep, you can't talk about specific names, but, water and reusing water, I mean, all these things are going to be increasingly important. I mean, the direction is clear, and there are a few companies who do this. Just your thoughts, Trideep, on the theme.
So basically, overall in the industrial space, while, I mean, last 2 years we saw the short cycle exposed companies do quite well. And some of them have run up quite nicely. They probably have more to go. But I think we are focusing our attention to those companies which provide nuts and bolts or some specific areas like the ones that you mentioned onto something big. For instance, desalination, or for that matter, companies that provide maybe turbines or stuff like that. Those are the types of companies which are in the niches, operate and help the manufacturing uptick that we are likely to see over the medium term, and that's where the next round of alpha is likely to come through. And finally, I would mention in capital markets, I think increasingly there are a couple of players where turnaround stories where some of the historical offerings have expanded meaningfully, and I think there could be non-linearity with regards to earnings that have sort of that might play out over the next couple of years. So I think last month or two, we've been focusing on more stock-specific areas where relative earnings turnaround could be meaningfully strong and, added to those names, apart from the nuts and bolts to suppliers to industrials, even transformers, and those are the areas that we are focusing on to add to the next level of growth in our portfolios.
Trideep, we leave the conversation here for now. Thank you very much for joining in. It's time for our segment